What's happening, guys, and welcome back to another Sunday Scan. If you are joining us for the first time, we are Investors Underground, and every week we do a scan to basically go over all the things that have been moving in the market and then all the things that are on watch for the upcoming week. And it's really to help generate, trade ideas or just kind of general information about trading setups, market conditions. And it's a great way to kind of get prepared for the week ahead, since we spend so much time kind of, looking at everything that happens throughout the week, and then we consolidate it down into a short, effective, and punchy Sunday scan. So make sure that you're subscribed to the Investors Underground channel and like, share, and subscribe. So we'll go through a couple things for this week. Before we get going, there is a regional Traders for a Cause event in Austin, Texas on October 21st. So make sure that if you are in the area or if you're interested in that, you go and check it out. The Traders for a Cause events are always very special. They're great for not only charitable giving, but also for networking and just to be around a bunch of people who have, a similar mindset, are in a similar place in their trading careers. And you get to meet people that are very experienced, people that are new, and just really, connect with the community over good causes. So that's a great event to check out. I will give the disclaimer now that everything that I'm about to get into, it's not financial advice, and these are not buy or sell recommendations. Everything is for informational and educational purposes only. So I'll get into a few market thoughts, and then we'll get into our main watches and get ready for the week ahead. So a ton of volatility. As always, I've been seeing posts all over X, Twitter about, really comparisons to other market periods and bubbles and all this stuff. And while, yes, all those things are true in some ways, a lot of times, you want to be aware of the environment that you're in, but you don't want it to dictate your, day-to-day kind of trade decisions. And what I mean by that is that, if we're in a hot period and money's flowing in and there's a ton of demand and, it's having, bubble-like tendencies, what tends to happen is that people can get, that in their mind that this is a bubble that's about to, pop any day. And while that might be true, a lot of times that can hold people back from really participating in some of the magnitude, as some of these things unfold. And so, for instance, in 2020 and 2021, a lot of what we saw during that period is, you had a huge cycle, a huge, wave of demand come in. And there were so many people that had like a normal market baseline. And then, they're used to, some bullish periods, some bearish periods, or, corrections, things like that. And then a 2021 kind of came around, or late 2020. And a lot of people who, saw how bubble-like it was getting, they were really like, this is going to burst any day. And a lot of people, they were more short biased, or they just kind of missed out on a lot of the magnitude for that. And it's really the same with, 2022, when that kind of bubble, popped and the Fed started doing the rate hiking cycle. And, that was really like a bubble popping. And a lot of people were still kind of stuck in the mindset of, 2021 of like, this can go higher. Like, the fundamentals don't necessarily matter in this kind of market. And then, they get caught in, they miss the magnitude of the unwind. So it's not to say that you can't have, a general market bias, but it's really, in my opinion, about trying to just, go with the path of least resistance. And if you have an unusual wave of demand, coming into the market, that usually signals two things to me. One is that, things like breaking news, things like breakouts, setups that work in bullish environments tend to work in an exaggerated way. So that is one way that I like to be able to, capitalize and participate on, action in market cycles. But the other thing that I always keep in the back of my mind is that, for every action, there's a reaction. And so if we're in a bullish environment, and, catalysts are going further than they should, and, breakouts are going further than they should, and things are trading more volume than they normally do, and valuations are more stretched than they normally would. Yes, I want to participate, in a lot of those setups, but I also am aware that the further that goes on, the more vulnerable that those stocks and those equities and those markets get to a real, unwind. And so how do you kind of balance that, with being open to the current market conditions, but then also, gaining an awareness of that when this eventually does pop, or when this does end, to be open-minded enough for that. So, hopefully that makes sense, but it's really about, it's not just locking into one bias and then hoping that your market bias is right. It's about being aware that, yes, this is the current reality, but with that, hand in hand with that go certain vulnerabilities. It's the same way during, market corrections or bear markets. Like even earlier this year when we saw like the tariff, bear market really, like the tariff correction, unfold and things were crashing and everything was going down. Yes, it all made sense. Yes, the bearish setups worked, all bearish catalysts, things were unwinding, multiples were compressing and everything like that. But the further that goes on, you want to align yourself with the magnitude, in my opinion, of those unwinds when they're happening. But keep in the back of your mind that the further that they go, the more compressed that things get, the more that shorts pile in, the more vulnerable it becomes to those, epic squeezes on, news reversals or things like that. Like we saw the 12% update in NASDAQ. So it's really about being aware, where are we at in a market cycle? And then, trying to align yourself with that, but being very aware of what could reverse that. And then knowing how large that reversal could really be, whether it's a bullish cycle that's vulnerable to an unwind or whether it's a bearish cycle vulnerable to a squeeze. And so, really being a trader, especially someone who focuses more on, more active trading, more short-term things, a couple of swing positions here or there, but, just being very, very adaptable and just recognizing what makes sense now. But then, what are the vulnerabilities and what could potentially change that cycle or set it off? So that's a way that I try to avoid, getting run over when things are, squeezing up and everything like that. I try to find, okay, if things have a permanent bid on them, if things are, going up every day, if every dip gets saved, what's a way to participate that in a safe manner? And, for like some of the sector plays like, robotics or quantum or things like that, if you have a sector that just refuses to go down, okay, what is the best way to play that on the upside? And that could be, those morning flushes that get saved every time. Maybe that becomes a risk level, and then you can kind of use that and go on a multi-day run. And then as those get more and more overextended, again, keeping that in your mind that yes, the magnitude is still, to the upside, but just like we saw with things like Oklo and some other names, they become more and more vulnerable to counter trend catalysts. Like we saw, earlier, maybe about a year ago with the quantum names when NVIDIA's CEO came out and made a negative comment. So just be aware that, you can have these strong runs, but they become more and more vulnerable to those counter trend catalysts and the unwinds when they're given a real reason. And kind of, on that topic, I'll pull up some charts now, but really going through some names that had some recent catalysts. So for instance, like Tesla just recently had, its earnings, this production numbers or delivery numbers. And, it was a big run up into that. And then it was a sell the news event. So sometimes regardless of the news itself, it's pricing in everything. And sometimes a catalyst is enough to just cause a big amount of range in a name. So that's something to be aware of. And we also saw some other names like CRML. So after hours on Friday, this had a large run up. This is a Greenlandic kind of metals mining company, and then there were some rumors about Trump taking a position in the company, and or the Trump administration possibly doing the government position in a company like this. And so you can just see how in a market environment like this, where a lot of demand, a lot of people are chasing everything like that, catalysts can really set things off. And so if you were to look at, okay, on a breaking news catalyst that really fits into the current narrative and is bullish, where is a good point if you're trying to long something like this, where can you risk against? And so maybe it's, if you're in early, it's using that equilibrium base of kind of where it came from. That could be one risk level somewhere in there. Or it could be, depending on what candles you're using. If you're using a 2 minute, 1 minute, or 5 minute, find a nice space where it ran up, it flushed, it caught itself, and then it's going for the next one. Then you can kind of use those places where it caught itself as a risk level. So that's one way to kind of participate on the long side. And then as things get more and more overextended, then kind of preparing for that vulnerability of the mean reversion. So just good things to keep in mind that this is a very catalyst-based market. So let's get into a couple of charts and environments. So IWM, this has been, a very, very bullish index in this kind of environment where you have a lot of not very profitable companies that are running. They have high short interest on them. They have high retail interest kind of getting into them. You have, I'm sure, hedge funds, piling in to the liquid names, especially for quantums and things like that. So in environments like that, you tend to have IWM do pretty well. It's been trying to, really break out of some of these longer term bases, and it's doing that in a little bit of a choppy fashion, but still that is one of the leading indices in this current market. And then on to kind of like some of the main watches, which I'll go through and like give some market commentary, but then also the main watches at the same time. So open, we talked about maybe a month ago when there's periods of concentrated focus and attention, and then more dispersed focus and attention, and especially in names that have historically had like a big following to them. Sometimes when they were in a more concentrated market, they work really well, and you could see how that played out here. And then when a lot of names are running, sometimes they lose some of their concentrated strength. So you can see it had that big flush here, and now on the daily chart, this is kind of like a big potential failed follow through forming, where this is an important area and this base is an important area. And if it can no longer kind of break those highs, what it starts to break under these lows of, call it 780 or something like that, and then possibly breaking below these lows, that can be a big trend reversal signal if it comes up. So failed follow through is a setup where you usually have some kind of a bullish pattern going up, and then you have a crack, and then you have some consolidation. It can no longer break the highs, it can break the lows, and that's kind of a reversal setup, or it can be. And this is like a daily chart view of something like that. So what I'd be looking for in the week ahead is to kind of put a line above here, so maybe above 9 or so, or 880s, which, remember, that was an important area from a few weeks ago, and then maybe 780s. And then if it starts to either base above that, it could be hands off or maybe a long bias. And if it's below that, then it could have a nice unwind. So just kind of being prepared, and incorporating those setups into it. BE, this has been one of the most incredible names, in my opinion, of this year, of just, really, really nice kind of swing trade off that catalyst, that episodic pivot kind of, day. And an episodic pivot is really when a neglected stock has a very, a strong catalyst, and it has huge amounts of volume associated with that, and then it tends to build and keep on going. And then, you can see that volume confirmation. It was in a hot sector, and then it kind of goes until it speeds up. Then it tends to mean revert. And then you basically had it get caught and some more positive catalysts. So this continues to get bullish options flow. It continues to be a bullish market. So I think that this could be one of those names that ends up, well over 100 if the market holds up. And so this is just kind of, one of those names, again, where if you can find places to risk along the way, if you're trading it more short term, or if you have those bigger areas like after that mean reversion to use as a risk area, if you have a longer term view, and if you were able to get in, much sooner to have a closer risk level. So just another name to review. And then I think that this has potential to be well over 100 in the week or weeks ahead, especially if the market remains bullish. App, I had some decent trades on this last week. It really didn't have, it had like kind of the start of a mean reversion trade, but it really was not like the full unwind, in my opinion. We went from mid 750s down to whatever it was, 680 or something like that. So a nice mean reversion there. I got some action on that with puts, but we'll see in the week ahead if it starts to kind of fail to follow through, kind of like what I was describing with open. So after a bullish trend, and you kind of have a crack here, does it start to just kind of base and build up again, or does it break below that 670s, 680s level, and then start to really unwind and do a full mean reversion, maybe down to the low 600s or a little bit further? So that will be on watch for puts if it starts to fail to follow through. But if it starts to base again, then I don't have much of a setup for the long side there. Quantum names, RGTI, incredible mover. So we talked maybe a week or two ago about how when sectors have upcoming events and catalysts, they tend to hold on very, very well. And especially if they're waiting on a big one from like a White House announcement or something like that, that could really determine the sector. Then you can have these names hang on for a long time, and then any incremental kind of catalyst along the way. So conferences, bullish upgrades or anything like that, that can kind of add fuel to the fire. And given how short crowded these are for the most part, you can see, kind of ignore these numbers over here. If you were just to look at this, pretend that this is an intraday chart, and you had, hype or an event coming up or something like that, and you had this big squeeze out consolidation, and then it ramps for the second leg. And we see that in small caps all the time. So this is just kind of like a bigger picture view of something like that. So after these really didn't break down on their mean reversion and then just caught, you have that second leg. And again, path of least resistance for now, as long as they're getting bullish options flow, as long as the market is bullish, and as long as they're getting upcoming catalysts, then they are likely to trend and continue higher until they have either a counter trend catalyst or it's a sell the news event, or like the White House announcement gets delayed or something like that. So I would be very aware of catalysts around the quantum names, for better or for worse, especially for worse. If you get a negative catalyst, I think you could have a big unwind, because again, the more these squeeze out and everything like that, the more vulnerable they become to that eventual unwind. So it's not about stepping in front of it, but it's just being aware of where we are in the cycle and then waiting for those catalysts to really get interested, because otherwise it can just be a steady squeeze up and grind until, if these get way, way, way overextended, more so than they already are, then that can sometimes, just be a technical mean reversion. But a lot of times with sector trades, especially like these, I think waiting for really like counter trend catalysts to really have a hard bias, or to really get super interested in a fade, is that makes sense to me. And the same thing kind of goes for QBTS and IONQ. Again, identifying relative strength and relative weakness in the sector, just knowing what's working well that day or what's trending well, or over that couple of days, and then just kind of picking your spots of, are you going after the relatively weak one, or are you going after the one that is the most overextended, or one that has a specific catalyst to it? So just keep in mind that there's different ways to play these names within the same sector, which is helpful. RR, this was a robotics name that we had on watch last week. It had bullish options flow, and the bullish options flow, a lot of times I like to say it's associated with moves, but it's not necessarily a determinant of moves. So what I mean by that is, let's say you have a hedge fund or something like that that is making or going to establish a very large position in a smaller company like that, or even a large company. A lot of times they'll do an equity position, then they'll do some kind of an option structure along with it, especially if their position in the equity is going to move the stock up. Sometimes that can be a way that they can capture the option side of that too. So a lot of times you'll see bullish positioning in equities, bullish positioning in options kind of happening at the same time. So if you have a confluence of factors that all look like they're fairly bullish, then that can be a sign that there's a good amount of demand coming in for that stock. So this is a nice extension here. I would assume that this would kind of keep running, especially if other names in the sector keep going, until you really have a blow off top, squeeze out all the shorts, and then you might have a nice mean reversion in there. But I would still have kind of a long bias on a name like this, especially since it's just breaking above these kind of prior highs here after a big consolidation. So a lot of times, you can assume that it might have a symmetrical kind of move to that first leg here. So maybe you have a move up to the sevens, the eights, the nines, or the tens in the coming days. But again, kind of having that like loosely in the back of your mind, but then focusing on the day to day. Where can you control your risk, and is the magnitude of the move still kind of on your side? Are we still in a bullish market? Everything like that. Or are we getting any kind of counter trend catalyst? Is the market coming in at all, or is there something that kind of derail that? So RR is on watch for the week ahead. DVLT, I had a few trades on this, but it's honestly been a pretty what I call like loose name. So there's different stocks, different personalities to stocks, and sometimes you have names that are very like tense. So very, very like tight bid-ask spreads. They don't really dip much, and they just kind of like consolidate very tightly. Then they have explosive moves, consolidate tightly. Other names, for whatever reason, maybe it's the personality of the stock, maybe it's the players in there, maybe it's due to passive dilution or passive buying or things like that. Sometimes you have names that just have a big amount of range, so you can see these big pops and big fades, big pops, big fades, and so it's maintaining its overall kind of trend. If you were to draw a trend line here and here. But within that trend, it's very loose. So you have to be aware that if you're, going to be positioning or trading a name like this, if you are just kind of buying in the middle of one of these areas, a lot of times you're going to get shaken out, whether you're right or wrong. If you're long or if you're short on a name like this, if it goes against you by, 15, 30 cents, you're most likely going to get stopped out, as opposed to waiting until it's kind of flushing if you have a long bias, or if it's really overextending and then starting to fail from those levels if you have more of a short bias. So again, the longer that these go on, the more 50-50 it becomes. And so if you are going to have a bias on something like this, you really want to make sure that you're positioning with a very tight controllable risk. So if you think it has some more in the tank and it's flushing down to one of these areas, if you can have a 5 cent stop or something like that, that's much more controllable than if you're just in the middle of this range and you have a 20 cent stop. And so now if you don't really know what the upside could be, and you have a bit of a looser risk, that's not a good trading setup. So, picking your spots in names like this, especially the ones that are a little bit looser. Netflix, recent negative catalyst. Elon was calling for people to unsubscribe to some Netflix stuff over some content things. But it's more just to highlight that, this is a very catalyst driven market. And, when you have any kind of catalyst, especially combined with a broader structure, sometimes that can make for a really good trading setup. So I had some puts on this at the end of last week, and then we'll see into the upcoming week. Does it kind of hold these levels, or does it start to kind of break down? If it starts to break down, I could see this having a nice unwind, at least for several, maybe 50 points to start out, and then potentially if the market turns or something, this could have a big unwind. But these levels are really key around here. So like that 1140 area, and then down here, what is this, to 1100 or so. So I would say those are the two key areas to watch. If it's breaking below 1140, if you see volume coming in, then that's a bearish signal about that. Because again, who knows how it actually plays out. But if you have someone with a lot of a large following calling for mass cancellations of subscriptions, and then word gets up to like the White House or something, you can have like this whole snowball effect of now a certain part of the population is now unsubscribing or things like that. So it can impact subscriber numbers and things like that. So it can trickle through. So it's not to say that it's a guaranteed thing by any means. It's more just to be aware that sometimes these stories or these initial catalysts can snowball into something greater. And we saw that, remember, with UNH last year after it had like the initial thing with losing the executive, and then after that it was like a whole kind of a cultural revolt against some like the healthcare stuff, and then down. So it can really spiral. So I'm not saying that Netflix necessarily is the same situation like that. But if you get enough of people involved in kind of shapes like a cultural narrative, then you can have some big moves tied to that. So this is on watch for puts below these areas. But if it starts to base and climb back up, then it would probably just be an avoid for me. So on the topic of kind of the healthcare side, so you had like the Trump RX kind of announcement. They're trying to get some drug prices down for things, and they're building a platform. They're striking deals with all these pharma companies. So that's been bullish for PFE so far, and a lot of the other names. So this is on watch for continuation. And you've really seen, like another characteristic of this market is that there's so much government involvement that names that are tied to catalysts like that, they can usually run for a pretty good amount of time. So even things like INTC, I would kind of lump this in with like kind of an INTC kind of situation, where if you have government involvement, even on a slower moving name, you can have some big range attached to that that's abnormal for it. So kind of a long bias on a lot of these healthcare names and these pharma names until they kind of overextend, or until you get a counter trend catalyst. But that's been one of those sectors that I've seen, getting some more demand than usual, especially over the last week or two. Palantir, again, on the topic of like those catalysts. So you can see they had a negative report or a negative catalyst, headline come out on them about one of their systems, who I think with the military had some vulnerabilities to it. And then the company came out and said, well, we already fixed that. So a good tell in a market is when you have a catalyst like this and then the company refutes it, see what happens next. So on Monday or on Tuesday, like into this week, does it just shake off the news and go back up? Or does that initial catalyst, was that the start of a larger profit taking kind of, cycle for a stock like this? So catalyst initial reaction and then the delayed reaction is a big, tell. And that's something that, people like Pradeep or Stockby, he's big on the delayed reactions, because sometimes you don't know if it's going to, fully form a trend. So if you wait for a catalyst with a flush and then wait a few days, see if it kind of fails to follow through, and then breaks through like that 170 level to the downside, that can be like a delayed reaction unwind. So sometimes waiting for that delayed reaction is more effective than trying to nail the initial move there. So Palantir will be on watch for puts if it starts to kind of fail to follow through, but if not, then probably more hands off. We already touched on Tesla. Again, same thing. It had the delivery numbers, and it was a sell the news event. I thought it could actually run a bit higher, but it just rejected off the open, never looked back. So if that's if that was the catalyst that everyone was buying into, and that happened, and then they sold into it, no gripes there. That's just the nature of the market. And again, kind of see big unwind here, and then what does it do after it's had a day or two to kind of consolidate? Does it have a delayed reaction, to the downside, or does it kind of recover and shake it off? And then we touched briefly on this CRML. So just like UUUU and like USAR, some of the other kind of like rare earth names, that have some government involvement. That was a big theme. And then for something like this is more of like a Greenland name. If we start to get some more involvement over there, then that could be a big new theme or new catalyst, especially since this news came out so late on Friday in after hours. I think a lot of people were probably off desk. So you'll have the weekend for people to write research reports and, get position or plan out their positioning and everything. So on Monday, this could be one of those ones that gets a little bit wild to keep an eye on. So those are really the names that I wanted to touch on for Sunday Scan this week. Again, kind of a quick scan going over a bunch of things. And I think that really the takeaway, other than understanding some of these technical patterns and some of these sector setups, is just being aware of how to properly think about a market cycle. And while keeping two things in mind: one, aligning yourself with the path of least resistance, while also knowing that it's as that's playing out, usually you have vulnerabilities that are brewing in the background. So waiting for something to set off that vulnerability can be very effective. And sometimes I'll use the avalanche analogy where, you'll sometimes have a snow peak or something like that, that it's super top heavy, it's super, unstable and everything, but it just needs something to set it off. And sometimes, if you were like an avalanche watcher, you could, be waiting months for, this whole thing to kind of tumble down, as opposed to someone who can kind of, see that there was, whatever it was, something to set it off, like a loud noise or something like that, that could really start the avalanche to start to unfold. And then, you can show up then. So, not getting too early, into a bias, especially for an online and some of these things, but just waiting for something to set them off, and then being in tune that, knowing that this cycle is more vulnerable to downside when you have negative catalysts. So those are really the things I want to cover in Sunday Scan this week. Let me know what you think in the comments. Make sure that you like the video, share it with another trader, and then just let us know, what kind of information would you like to see more in the future. And then also check out the other content on the Investors Underground channel. So that's all I have for this week. I hope that everyone has a great week, and we'll see you in IU. Thank you everyone for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.